Welcome to Bayanat, the heartbeat of tech in MENA. We bring you raw stories and sharp insights from the founders, investors, and leaders building the region's startup ecosystem.
Okay, let's unpack this. Today, we're jumping into a deep dive on a really fascinating journey. The story of Ramsey Farah and Razor Capital. We're pulling insights from an article looking at how they navigated investing in, well, what they call frontier markets. Think regions like MENA, the Middle East, North Africa, and Southeast Asia.
Right, and for you listening, maybe you're a founder building there, maybe you're an investor hunting for value, or maybe you're just, really curious about spotting opportunities. Others miss. Our mission here is to pull out the key lessons. What's it really take to build conviction, to find those gems, and make it work in markets far away from the usual hubs? We're going to draw directly from Ramsey and Razor's experience, starting way back in Bangladesh.
So Ramsey's beginning, it wasn't exactly a straight line into VC, was it?
No, not at all.
I mean, picture this. He's interning at Lehman Brothers during the 2008 crisis.
Wow, talk about a baptism by fire into finance. Exactly. Then he did time in corporate lending, investment banking in Beirut.
So the traditional finance path. Gaining experience, seeing how it works. But it sounds like, well, it wasn't quite clicking for him long term.
Seems like it. He was exploring, did a master's, kind of searching, and then came the pivot. He mentions an early angel investment he made way back in 2013 in a company called Yoko. That was the spark. That taste of early stage investing, the risk, the potential impact, that was what grabbed him. It pushed him away from traditional finance squarely towards VC.
Which, yes, sets the stage perfectly for Razor Capital and this whole Bangladesh idea.
Right, the Bangladesh gold mine, as he puts it. The story starts summer 2015. Ramsey's friend, Usama Galila, comes back from a trip to Bangladesh totally energized. His friends there were like, "You have to see this, it's exploding." Usama was sold. A gold mine.
And you can imagine Ramsey thinking, Bangladesh, really, for VC? A bit skeptical at first, maybe.
Probably. But then he looked at the data Usama brought back. And it was, well, pretty compelling.
What kind of numbers are we talking?
Huge population, 170 million people. Fastest growing economy in Asia at the time, like 7-8% GDP growth.
Wow.
Super young population too, median age 24, 25, and digitization just taking off.
Okay, so when you see those kinds of fundamentals, what does that tell you as a potential investor?
It screams potential.
Exactly. You've got the macro tailwinds growth, demographics, combined with this digital shift. That's fertile ground for tech startups, even if it's not Silicon Valley. And that alignment, that potential, led to, believe it or not, a WhatsApp group first, a Razo.
Ah, really? A WhatsApp group?
Yeah, which then became Razor Capital, formalized with Usama and their Bangladeshi partners, Ahad and Zoheb, laser focused on Bangladesh.
And their very first investment. Bongo. Bold doesn't quite cover it.
Tell us about Bongo. What was the idea?
Okay, so Bongo was co-founded by Ahad, one of the partners,
Yeah.
and Nevedul Haq. Their mission was kind of wild, almost like digital archaeology. They set out to acquire the rights to basically all of Bangladesh's old media content stuff on floppy disks, VHS tapes, you name it, and digitize it all.
To build the country's biggest digital library. That's ambitious.
Hugely ambitious.
Yeah.
They wanted to be the Netflix of Bangladesh. And think about it, the Bangla-speaking population, 7th largest globally. That's a massive audience if you can capture the digital media space.
Ramsey actually talks about his first trip there, January 2016. He said he was just shocked by the energy, the hustle everywhere. It wasn't just spreadsheets. It was seeing it on the ground.
And that feeling clearly turned into action because, get this, by the end of that first week in Bangladesh, they signed a term sheet.
For how much?
$1.5 million. For Bongo.
Wow. Okay, so a term sheet, just for listeners, it's like the initial agreement, right? Outlines the deal.
Exactly. A big commitment.
And they signed it before they'd even formally set up the fund or raised all that cash.
And that's the story. Speaks volumes about their conviction, doesn't it?
Absolutely gutsy. Which means fundraising must have been next.
Oh, yeah. The whole next year, basically all of 2016 was spent just fundraising for Bongo to actually close that deal they'd committed to.
And imagine how tough that was. They were like one of the first international VCs saying, we're all in on Bangladesh.
Right. The ecosystem was just starting. No established follow-on investors lined up. They were kind of building the plane while flying it.
Building the VC infrastructure from scratch, almost.
So where did the money come from? Not the big institutions, right?
Whoa, the article points to family, friends, early believers, people who bought into the Bangladesh story just like they did. It was hustle.
But it worked out. Bongo today. reportedly the biggest media conglomerate in the country.
Incredible. Proof of concept right there.
Definitely. And after that, Razor Capital really doubled down in Bangladesh, deployed over $10 million through their first fund, Monsoon Tech, built a strong portfolio.
But they didn't just stay in Bangladesh, did they? They evolved.
Right. After getting some successful exits under their belt, they expanded to 3 main areas.
Okay, what are those?
First, there's Monsoon II. That's their second Asia fund. Still Bangladesh, but also wider Southeast Asia, Indonesia, Vietnam, the Philippines, high potential markets.
Makes sense. Broadening the scope based on that initial success.
Then something different. In 2020, during all the turmoil in Lebanon, they launched Lighthouse.
Lighthouse?
Yeah.
What's that focus on?
It's more like a growth studio, specifically backing Lebanese entrepreneurs, seed to Series A. They've backed 5 companies, including Podio, which is now apparently the biggest podcasting platform in MENA.
Interesting. A very targeted, supportive approach there. And the third arm?
That's RC Select. Totally different. It's for making targeted minority investments in top-tier U.S. and U.K. tech companies. Think SpaceX, Voyager Space.
So diversification, accessing different kinds of opportunities, maybe managing risk differently across the portfolio.
Exactly. Which kind of leads into this point Ramsey makes about fundraising challenges. It's a whole different ball game, emerging markets versus, say, the U.S.
Oh, undoubtedly. He highlights how much harder it is, right?
Massively harder. In the U.S., it seems like there's capital everywhere, established paths. But MEA is CEA. Securing funding is a different beast.
And why is that? What's the dynamic?
Well, the article suggests a lot of global capital, especially big pools like U.S. family offices, prioritizes safety, liquidity, familiarity.
Right. Bonds, real estate, blue chip stocks. The usual suspects get the bulk of the money.
Venture capital is already a small slice of that pie. And historically, that small slice stays close to home, in markets where investors feel they understand the path to returns and exits. Silicon Valley, New York, London.
So if you're raising for a fund or a startup in, say, Vietnam or Egypt, you've got a double hurdle.
Yeah. First, convince investors about the potential of a region they might see as risky.
And second, compete against all those seemingly safer, more familiar opportunities back in the established market.
It's tough. But Ramsey does mention a positive trend, especially in Asia.
Oh yeah, what's that?
More local wealth family offices in China, Vietnam, Indonesia is starting to stay local, reinvesting in their own region startups.
That's crucial. Homegrown, capital fueling, homegrown innovation. That could be a game changer.
Definitely. So, given all this, how does Ramsey decide where to put money? His core philosophy seems simple but powerful.
Which is?
You have to invest where the problems are.
Say more about that.
He sees these emerging markets not just as risky, but as places with huge unmet needs, massive challenges.
And the thinking is, big challenges create big opportunities.
Exactly. Opportunities for companies to build real solutions, have meaningful impact, and create significant value, precisely because they're tackling fundamental problems.
But that also means the typical VC playbook might not fit, right? Especially with capital being tighter.
Right. That Silicon Valley model of raise huge rounds, burn fast, grow at all costs, maybe doesn't translate perfectly.
So what's the alternative? He mentions needing a kind of private equity approach within venture. What does that look like for a startup?
It sounds like building for sustainability almost from day one.
Less reliance on the next funding round being guaranteed.
Yeah. More focus on solid unit economics, efficient growth, getting to revenue, maybe even profitability, much sooner.
Yeah.
Because you have to be robust when capital isn't infinite.
Building resilience in from the start, not just bolting it on later. That's a very different way to think about building a company.
It changes everything: hiring, scaling, pricing.
Yeah.
A different mindset for founders and investors.
Ramsey reflects on it, saying the path wasn't easy, obviously, but it's been deeply rewarding. Showing it's possible, right? To build value where others maybe just saw risk.
Absolutely. So for you listening, whether you're that founder in a tough market or an investor looking off the beaten path,
this story really highlights needing that deep local understanding, that conviction, and maybe needing a different playbook altogether. Building companies designed to last in environments where resources aren't endless.
That idea, the need for a different playbook, shifting from just growth to sustainability from the get-go, that feels really key. It makes you wonder What other standard VC or business assumptions need a total rethink when you're operating in these dynamic, challenging, but ultimately high-potential emerging markets?
That's the question driving so much innovation, isn't it?
For more stories like this, subscribe to Bayana's newsletter and stay updated on the latest in MENA's tech and startup ecosystem.